And welcome back. Fannie Mae just announced their latest housing market forecast through 2024, with some revisions due to the fact that we have a lack of houses for sale, historically speaking here. So for example, Fannie Mae says, while housing demand and home prices have proved to be more resilient than previously anticipated, their Economic and Strategic Research Group, or their ESR group, expects home sale activity to remain subdued because of persistently low inventory levels of existing houses. And of course, they say here this lack of houses for sale, historically speaking, is due in large part due to this lock-in effect because a lot of people do not want to give up their historically low rates. They also note here there's a significant regional variation in actual and expected home price movements, which is making it very challenging to report the latest housing market updates for you guys, because in the West as a whole, we're seeing the biggest decreases in home prices from 1 year ago. Whereas in the South and also the Midwest, they're actually experiencing some areas in which prices are still going up. It's almost like you can split the United States in half, where the western side of the United States is experiencing the biggest decreases, whereas the eastern side is experiencing the smallest increases, and in some cases, increases still regarding home prices. And Fannie Mae actually shares a really good map of that, which I'll share with you guys here in just a little bit. Fannie Mae also says here that housing activity appears to have been modestly stronger over the first quarter than they previously anticipated. And with a modest pullback in rates since early March, we expect a slight pickup in sales for the spring home buying season. What's interesting about their quote here saying that we should be seeing an uptick in sales for the spring home buying season is that we have not seen that yet. So according to my analysis from the National Association of Realtors, a video I posted on the 21st of April, we did see a big increase in February, going from a seasonally adjusted annualized basis of home sales in the US, going from 4 million to about 4.55 million. But for March, it decreased 2.4% to approximately 4.4 million existing home sales in the US. We're also down by 22% compared to 12 months ago as well. So we're not seeing this seasonal uptick in home sales just yet. Fannie Mae also revised their housing market forecast for home prices this year as well. They say here, we now expect a smaller decrease in home prices in 2023 on a Q4 to Q4 basis. So Q4 2022 compared to Q4 2023. Also, as measured by their home price index, which is called their HPI, they now anticipate negative 1.2% growth. Another way to say this is that they expect home prices to decrease by 1.2% versus their previous expectation of a decrease of 4.2% in 2023. That's pretty big because last month, their forecast was for prices to decrease by 4.2% this year. Now they're saying that's only going to be 1.2%. So that's 2023. Here's our forecast for 2024 though. We forecast prices to fall an additional 2.2% compared to the previous 2.3% projected decrease. So 1 month ago, they were projecting prices to decrease 2.3% in 2024. Now that forecast just got revised upward. Now it's a 2.2% decrease that they're forecasting for 2024. Now here's something I 100% agree with them regarding this. It says, while comparatively stronger housing demand leads to more resilient in prices, ongoing affordability constraints, a lack of houses for sale, historically speaking, and the ongoing persistence of this lock-in effect will likely keep home sales subdued for the remainder of the year. Also, check this out, because even though they're seeing demand being stronger this year than they previously expected, they did revise upward their total home sales for 2023. Their forecast is for 4.84 million units. That's existing houses plus brand new houses. So revised upward their forecast to 4.84 million. Their previous expectations was 4.63 million this year. However, though, at 4.84 million, this still represents the slowest annual pace of sales since 2011. I mean, how wild is that? They actually revised upward their forecast, but despite that, this is going to be potentially a 12-year low regarding home sales this year. Fannie Mae also cited Realtor.com. If you guys recall, I post a weekly video based on my own analysis of Realtor.com's data here. It says, according to Realtor.com, the overall supply of listings of houses for sale, house inventory, as of the end of March was roughly 60% higher than it was a year ago. However, the total amount remains at roughly half pre-pandemic levels, as is important to you guys. Furthermore, the growth in available inventory, in other words, the growth rate of the number of houses for sale compared to the past year, was primarily due to the fact we had a slower pace of home sales rather than an increase of new listings, which is exactly what I've been talking about. The increase of inventory levels, a gain of around 40 to 60% compared to 2022, is not due to a giant increase of new listings, because new listings have been decreasing compared to last year for approximately 40 consecutive weeks. Therefore, this rise of inventory, or the number of houses for sale, is not due to an increase of new listings. In fact, it's due to a lack of houses being sold, a lack of contracts being signed, and of course, houses taking longer to sell compared to last year. In any case, I found this interesting because this is exactly what I've been talking about on the channel for quite some time. So it feels a little bit validating that Fannie Mae is also has the same thoughts on this as well. Let's move on though. They say here, in short, while we anticipate the recent modest pullback in rates following the banking turmoil in March, of course, will put a little more energy into the spring home buying season, the total volume of sales is likely to remain subdued. Beyond the lack of inventory and of course this lock-in effect, affordability constraints also remain as well. Now here's a really good chart that I actually really love, because this is showing the number of houses for sale in the US going back to 2017, which gives us a really good idea about how low the levels we have right now are compared to historical levels here. So new listings are in orange, which is right here. New listings down greatly compared to pre-COVID levels, but active listings, this is what I really want to focus on here. So active listings increased 60% compared to 12 months ago. So there's approximately 600,000 or just under 600,000 houses for sale according to this chart right here. But look at 2019 and going back all the way to 2017. Every single month in 2017, 2018, and 2019, we had more than 1 million houses for sale. Now we have less than 600,000. In fact, to me, it looks like the average over those years is approximately 1.2 million, far below the levels we have right now. And in fact, the reason for this is right here, a lack of new listings hitting the market. In fact, in the last half of 2022, which is right here, we had an all-time record low in the number of new listings, at least going back to at least 2017. So for example, back in 2018 and 2019, the lows were around 300,000 new listings, whereas right here, it was just over 200,000. So therefore, we're missing approximately 100,000 new listings in approximately December last year compared to 2018 and 2019. And Fannie Mae says this ongoing lack of existing houses for sale, historically speaking, will continue to support demand for new houses. So for example, new home sales should hold up comparatively well to existing houses. Home builders continue to show a willingness to offer rate buydowns and other incentives to drive home sales. This past year's pullback in the price of lumber and other building materials also helps builders maintain margins even with discounting their houses, and we would expect them to continue to do so. In other words, because builders right now have healthy margins, and also because the price of building materials and lumber is going down, that would actually incentivize builders to offer more discounts to buyers in order to drive home sales. Fannie Mae also touched a little bit more regarding this variation in price changes in the US right now. It says some metros have already experienced nearly 10% home price declines since the summer of 2022. I would say some areas have experienced much greater than 10%. So for example, Austin, Texas has decreased by about 20% compared to last year's highs, for example. In contrast, other areas have experienced modest appreciation in home prices. we expect significant regional variation to continue going forward, which is making it very challenging to report latest trends. But this is actually a really good map to kind of show this depiction here, splitting the US in half right here. As you can see, the western states have experienced the biggest decreases in home prices compared to last August, whereas the Midwest, the South, and parts of the East have experienced increases in some areas. Fannie Mae also touched on this as well because some areas that had giant booms in their housing market back in mid-2020 through mid-2022 are now giving back some of those price gains. In contrast, many regions in the East and the Midwest that saw comparatively modest gains in 2020 through 2021 have continued to experience home price appreciation. Now, speaking of home prices, here's Fannie Mae's housing market forecast through 2024 for home prices, which is based on their HPI or their home price index. So for 2022, of course, we saw giant increases in home prices, especially in Q1 and Q2 last year. But here's our forecast for 2023, again, based on their HPI. And these numbers right here are based on quarter over quarter numbers here. So for example, for Q2 of 2023, their forecast is that prices are going to decrease by 0.1% compared to the second quarter of 2022. Then to decrease by 0.8% in Q3, then down by 1.2% in Q4 compared to Q4 of 2022. And that's pretty amazing because they're basically saying here that the decrease we saw in the second half of 2022 is actually going to get worse this year, which I actually would be really surprised to hear that because back in the second half last year, inventory levels were skyrocketing, and of course, rates were skyrocketing as well. Whereas this year, I don't know, this catches me by surprise. I would not expect we're going to see a second half that's as bad as 2022. But what do I know? I'm not a real estate market fortune teller, and time will tell. Here's what also is interesting as well, because they're basically saying here that starting in Q2 of this year through Q4, at least of 2024, they're calling for prices to decrease compared to the previous quarters here. And overall in 2023, their forecast is calling for a decrease of 1.2%, then a further decline of 2.2% in 2024. Now, here's something that's interesting as well. Here's our forecast for rates, for mortgage rates. So for Q2 of 2023, they're calling for the average to be 6.1%. The average in Q1 this year was 6.4%. Then look at this, decreases all the way through 2024, the end of 2024. So by the time we hit Q4 of 2024, they're predicting that the average 30-year fix is going to be 5.2% versus the 5.7% they're forecasting for Q4 this year. So overall in 2022, their average rate was 5.3%, but they're forecasting for this year to be 6%, and then a decrease of 5.3% in 2024. In regards to total home sales, which by the way, this is based on a seasonally adjusted annualized basis, and also these are in thousands of units, of course, as well. So for Q2 this year, their forecast is calling for just under 4.9 million total home sales. Then a decrease in Q3, Q4, and then increase in Q1 next year, going to 4.9 million approximately, and then increasing every quarter after that. By the time we hit Q4, we're at 5.2 million versus the 4.7 million they're forecasting this year in Q4. And overall for the year, they're calling for the total home sales to be 4.8 million and then 5 million in 2024. That'd be a 4% increase compared to 2023's 14.6% decrease from 2022. For new home construction, which is this line right here, in 2022, a decrease of 16.9% versus existing houses down by 17.8%. In Q3, look at these big changes here. So this year, they're calling for new home construction or new home sales to only decrease by 1.9%, whereas this year for existing houses, home sales decreasing by 16.3% compared to 2022. That's followed by a 4.5% increase in 2024 for existing and a 0.4% increase for new builds. Let's also talk about housing starts for single family versus multifamily as well. And again, these are based on a seasonally adjusted annualized basis and are in thousands of units as well. So single family is this column right here, right there. They're calling for a decrease of single family housing starts down by 22.7% compared to 2022. And for multifamily, down nearly 17%, which of course a housing start is the beginning phase in the construction of building a brand new home. For single family in 2024, they're calling for a 9.5% increase versus the 16.9% decrease for multifamily. So the forecast is a decrease again, down by 16.9% compared to 2023 for multifamily, but just the opposite for single family housing starts, an increase of nearly 10%. And with that said, please comment below your biggest takeaways from today's video. Also, if you guys got any value in this video whatsoever, then please hit the like button. I greatly appreciate that. Of course, I appreciate you. Hope you guys have an awesome day. I look forward to seeing you on the next video.